Are you thirsty for more profits? If you are, this video is going to deep dive into the clash of two titans, Coca-Cola and Pepsi, two of the world's largest drinks manufacturers, and we're going to be asking the question which of the two would make a good investment for your hard-earned cash, but more importantly, how you go about researching to make sure you're making the best financial decision, investment decision for you. So to quench that thirst for profits, keep watching. Now, on the surface, these two companies are very, very similar. They're very well-established, internationally known brands, but they're very, very different. And what we're going to do now is take a very high-level view at maybe some of the financial numbers around these businesses, starting with market cap. Now, market cap is about how much a business is worth. In the case of Pepsi, it is worth $252 billion as of the time of recording this video. Coca-Cola, on the other hand, is worth $272 billion. So maybe a win there for Coca-Cola. Let's talk about dividends. So what dividends do they pay to their customers? And as an investor, you may like this idea. Many people do, because you can take your dividends as a passive income, or if you're really, really smart and young, you can actually put that money into an accumulation. So reinvest those dividends to get compound interest working in your favor. At this point in time, Pepsi is paying a dividend of 2.8%, whilst Coke is paying a dividend of 2.9%. Now let's have a look at their profit margin, because this is really important and actually is integral to their dividend payments. Pepsi at the moment has a profit margin of 10.2%, where Coca-Cola has a profit margin of almost double, 22%. So at a very, very high level, you start to see from a performance point of view, these two companies look very, very different in terms of the numbers. And this is where we get into fundamental research. This is a way in which you start to dissect a company to see if it's a good investment. And in fundamental research, one of the key areas that you might choose to look at is financials. So their financial statements, looking at their financial performance over a period of time. Now, back in the day when I was in corporate banking, I used to sit there and actually read through financial accounts. And it's interesting because financial accounts will give you a understanding of where a business is coming from and where a business is going. And when you're reading through financial statements, there are a few key things that you want to be having a look at. So first, you want to be looking at their revenue. Are they bringing in a good amount of money? But more importantly, is that revenue stream increasing over a period of time? So say for the last 2-3 years, has their revenue increased at a steady rate? You're also looking for indications of how much cash they're actually burning through. So how much cash does it cost for them to market, to develop new products, to actually do business? And how does that translate to their bottom line, to their profit? There are a lot of companies at the moment on the stock market that aren't profitable, who bring in a lot of money, but they're burning through cash in aid to grow their business. So this isn't the end all or be all, but for an established brand, you probably want to see a good profit margin at the bottom line after all of the revenues have come through the business. You also want to see what's on their balance sheet. So what assets do they hold versus how much do they actually owe? This is, if you think about this from a personal finance point of view, it makes sense from a budget that you want to spend less than you earn, but also you want to acquire assets, right? So you don't want to own more assets or own more things than you actually own yourself. This adds to your net worth. So the more assets you own, the more financially stable you'll be personally. And this is exactly the same when it comes to businesses. So when you're looking at financial accounts, it's worthwhile just remembering, though, it is a snapshot of the performance of the business at a point in time. Yes, when you become really good at this, you'll start to be able to see the trend within the business, where they've started to invest in the business. And if you're really in tune with what's going on with the business and news, it will make sense in terms of their direction of travel and how the business is aiming to grow. But again, this can take a lot of time for you to become proficient at, for you to be able to interpret the information into a tangible piece or set of factors that will enable you to make the best financial decision or best investment decision in this case. When you're doing fundamental research, you probably also want to start having a look at economic environments. This is really important. During a recession, people's spending habits change. So is this particular company able to manipulate their prices, so for example, to offset any businesses that they might lose because people's spending habits are changing. Not a lot of companies are in the position to do so. And in the case of Coca-Cola and Pepsi, they each have a very, very different pricing strategy. This is key in terms of the potential for the business to grow in the future. One of the other things in fundamental research is having a look at how diversified a company is. Now, when you have a look at Coca-Cola, Coca-Cola owns 500 brands globally across 200 companies, but a lot of them are actually soft drinks carbonated companies. And as the world has kind of shifted to more of a healthy lifestyle, they face a challenge when it comes to carbonated drinks because of the sugar content within those drinks. And it means that actually, from a point of future growth, this is a real Achilles heel for them. When you look at it from a point of view of Pepsi, they own about 100 brands globally, but they've diversified into juices and into snacks. So from a snacks point of view, they own Quaker Oats and they also own Doritos. And when you look at their revenue streams, what their revenue is made up of, 50% of their revenue comes from juices, snacks, and other businesses that they own. That isn't the case for Coca-Cola. So understanding how a business is built in terms of their product set and how their revenue is generated is also a key factor when you start looking at fundamental research. Now, the point of fundamental research is to establish whether or not a stock is overvalued or undervalued in relation to its intrinsic value or its share price. Now, just to give you an example of this, Coca-Cola, as of the time of making this video, the current share price is $63 a share. The fair market price, or the fair share price for Coca-Cola is $64, which means that it's trading 1.5% undervalue at this point in time. Now, as an investor, you may see that as a good thing because it's an indication that you may be getting better value for your money. Now, look at Pepsi on the other hand. As of recording this video, the share price is $184 a share. However, the fair share price is $163. So it's trading 12% overvalue at this point in time. And again, as an investor, you may feel that you don't want to overpay to invest in Pepsi currently. Really important points to understand when you're doing this research. And that brings us on to the second way in which you research, which we'll talk about the share price specifically, technical analysis. That's not really my area of expertise, so I have an expert to speak to. So for this part of the video, I'm going to be speaking with Axel, who is an analyst at IG. Axel, would you mind giving an introduction to yourself for the audience's benefit, please?
Sure, Peter. Basically, my name is Axel Rudolph, and I've been working in the financial markets for over 30 years now, primarily for several investment banks, both in Europe and also in the UK. And I joined IG last year as a market analyst.
As an analyst, when you start looking at companies like Coca-Cola and Pepsi, how do you view them? Where do you begin as an analyst?
Well, actually, in my case, it's a bit peculiar because I'm actually a technical analyst. So I look at graphs of financial markets and behavioral finance. And what I try and do when I do my own analysis is to look at, for example, both of these share prices and to see which one is outperforming. So if you look at PepsiCo, for example, compared to Coca-Cola, you can see that since 2001, the PepsiCo share price has greatly outperformed that of Coca-Cola. Now, if you're not a technical analyst, and if you don't look at charts and trends, what you can do is look at fundamental data such as price earnings ratios, dividend yields, earnings per share, and things like that, and make up your mind with regards to the fundamental picture of the underlying share. But at the end of the day, what it really boils down to is the share you want to buy outperforming its peers? Is it outperforming the sector? Is it outperforming the underlying index? And if it does, then the odds are pretty high that if you are, for example, in an uptrend, that trend is likely to continue. So, for example, if I were to buy a stock and had to choose between PepsiCo and Coca-Cola, I would buy PepsiCo because over the last 5 years, for example, PepsiCo has risen by about 67% in its share price, whereas Coca-Cola's share price has risen by about 41%.
On the surface, the two companies seem very, very similar because Pepsi, Coca-Cola, it's almost the same drink. But how are they fundamentally different from your analysis when you approach it as an analyst and from the analytical point of view?
Well, as I said before, from a technical perspective, what I would look at is the fundamental outperformance of one stock versus the other. So Pepsi is outperforming Coca-Cola with regards to the share price. And for example, if you look at the Pepsi share price today, it's only about 4.5% away from its all-time high, which was made back in December of last year. And for Coca-Cola, that share price high is about 6.5% further away. So not quite as close to the all-time highs. And from a fundamental point of view, I'd look at the underlying companies. I mean, what are they actually doing? Because there is a big difference. PepsiCo owns a lot of different brands, but not
Hmm.
just in the beverages sector. It also owns brands in snacks, for example, or in foods. So it's got Lipton, it's got companies like Walker's Crisps, and it owns not just beverages. Whereas Coca-Cola is very much focused on beverage brands. So owns other brands such as Sprite or Fanta, but it is still focused on beverages. So the companies are not comparable because um, Pepsi is a much wider, diversified company with regards to the products it offers compared to Coca-Cola, which is really focused on the beverages only. And also from a pricing point of view, the strategies which these companies use are different. PepsiCo is well known for adapting to its local markets, so it depends on which geography it's selling its products in, and thereby it will adopt its selling prices to those local geographic markets. Whereas Coca-Cola has a much more centralized pricing policy where it will tend to make their products cost the same all across the globe.
Yeah, it's interesting you mentioned there that Pepsi is a little bit more diversified into snacks and stuff. In times like a cost of living crisis, do you think that that is a big proponent to some of the outperformance that you've seen, or do you not feel that it's part of it, part of the outperformance?
It doesn't really matter what I feel and what I think. What matters is the share price. And the share price is telling me that even this year, Pepsi is actually outperforming Coca-Cola. Coca-Cola is flat to slightly down, I think 0.5% or so year to date, whereas PepsiCo's share prices are up about 1.5%. So there you also see this outperformance just over the last few weeks and months during the cost of living crisis. So maybe it has more to do with PepsiCo's pricing policy and it offering in certain geographical regions their products at cheaper prices than it would, for example, in the UK or in the US, whereas Coca-Cola seems to have a similar pricing structure all around the world.
Hmm. So I think what was it? I think Coca Cola has about 500 brands or so. When people research the company and they say, well, Coca Cola's got 500 brands, which you've already alluded to are predominantly beverage based, drink based kind of brands. Pepsi don't have that many under their banner. So, how much of an owner should people who are researching those kind of data points take the difference of 500 brands here, maybe 300 to 200 here in Pepsi? How much of an impact should that have on the research that the people are doing? Should it be a factor or a non-factor?
I'm probably not the right person to ask that because I'm not a fundamental analyst at heart. And that's precisely the reason I'm a technical analyst, because I believe, and I firmly believe this, that everything that we know possibly about the share, for example, or a share price, is included in its price. So if I analyze just one variable, that is the price, and I can see whether that price is going up, whether we have an uptrend or a downtrend, for example, I can gather as much information if I know what I'm doing. That's a big if. But if
Hmm.
I am a good technical analyst and I have experience, I can deduct from the price alone what the price is likely to do in the future. Whereas a fundamental analyst has to analyze all these different variables. And that is very difficult to do because things change constantly on all kinds of different levels. And it also has to do with the underlying economy the products are sold in. I mean, if you're in a recession, perhaps people might buy less products, and that might affect, obviously, your profit margins and things like that. So a fundamental analyst would probably not just look at the brands. That person would probably analyze things such as the price to earnings ratio, the earnings per share, the dividend yield, that is to say, the passive income you would get if you completely ignore the share price and its movements up and down and just look at how much interest, in effect, you're getting on your investment per year, which is the dividend. So things like that would be analyzed by professional investors, and I would urge those retail clients of ours, for example, or retail traders in general, or investors, to also look at these things if they don't look at financial markets from a technical point of view.
Would you say that there is one tip that you would give people to help them try and get this right, or at least make the best decision for them?
Yes, spend as much as time as you can and learn and learn and learn and learn, and then practice. Practice makes perfect. It's like anything in life. The more you learn about things, the more you practice things, the more experience you have, the better you're getting at things. So what I would urge people to do is, I know there's a lot of information out there for free on the internet, but perhaps to spend a little money to make sure you buy courses or information or books from reputable sources, and thereby make sure that the information that you are learning about is correct. So, for example, with regards to technical analysis, there's the not-for-profit body in the UK, the Society of Technical Analysts, that you can look at. They have courses with regards to the fundamental information and also technical information. There are lots of free website pages available to people from the spread betting companies such as IG, for example. You've got the IG Academy as an example, but you've got other ones from other competing companies as well that you can look at. And that information is reliable, yet it's free. So just try and learn as much as you possibly can.
Yeah. I think education is really, really important. What would you say to people who are they don't know how to identify reputable sources? Because I mean, YouTube is great, social media is great, but it does mean that anyone can just pop onto a social media platform and just say whatever they've watched in the video or read in an article without it necessarily being grounded in solid knowledge bases. So, what would you say is the right way to identify credible sources of information to actually learn from?
Well, as I just mentioned, it's companies that have been around for a long time. So not just the one person who might have created their blog or something a year ago, but if people have been around for decades and have not necessarily a large following, but uh, people who have experience and that can actually be proven. Look at people's CVs. Have they worked in investment banking? Have they worked as a fund manager, for example, in the past, or hedge fund manager? Do they have experience with regards to financial markets? Have they written books about the subject matter? Things like that make those people much more credible. And then also you have companies such as the banks who also nowadays give you free
Mhm.
investment information that is credible, simply because these companies are regulated globally.
That's brilliant. Thank you so much for this, Axel, because that's quite insightful. And I hope that people will be able to take something tangible from this as well. Because when I talk about technical analysis, fundamental analysis, I go at a very, very high level, which is why it's always worthwhile bringing an expert like yourself to actually share some wisdom. So thank you. So, what are the key takeaways from this video? Well, for me, it's that actually technical analysis and just doing fundamental research, they are two separate things, but important things. And in this conversation, one of the things that we have learned is that, well, Pepsi at the moment, at this point in time, is outperforming Coca Cola. That isn't to say that it's always going to do that, but at this point in time, it is. But understanding how you come to those conclusions using either fundamental research or technical analysis is really important. And by the way, guys, this is no nod to say that you should go and invest in Pepsi over Coca Cola. This is for educational purposes only. And as we have quoted some of the performance of each of these companies, please understand that that is actually past performance and it is no indication to future performance. For me, though, the biggest takeaway is the need for education and how important it is, particularly picking up the skills to be able to research stocks, to be able to look at companies, to be able to dissect that information and use that information to make the best decision as possible for yourself when you're looking to invest in businesses. This is a skill skill set that will pay dividends for many years to come. If I had to use an analogy, I would use this one, where would you prefer to have someone go out to a lake with you and fish on your behalf, or would you rather be able to go out onto that lake and fish because you were taught how to fish so you could feed yourself? I would prefer the latter. And this is where education is so important, because it is that skill to be able to feed yourself, to be able to fish on your own. And so I guess really with this video, whilst we've covered quite a lot, I want to leave you with the point of upskilling yourself and how important that is. And so my ask from you in this video is to follow the link in the description. This is a collaboration with IG. They are really passionate about helping people learn the skills necessary in order to be able to invest confidently. And if you follow that link, it will take you to a course that will give you a little bit more information about what we've spoken about here. There are a number of courses that you can also take with IG. It is completely free. It isn't going to cost you anything at all, but it will definitely help you on your journey. I would also love to hear your thoughts on whether you're surprised that Pepsi at this point in time is outperforming Coca-Cola. Now, I don't know about you. I remember their Christmas adverts, and that is how I have a little bit of nostalgia with Coca-Cola. That, I guess, subconscious connection with the brand, more so than Pepsi, even though they did have the Michael Jackson generation back in the 80s. And I remember that vividly. I'm a mad MJ fan. But I don't know, I just have that connection with Coca-Cola because of the Christmas adverts. It's pretty mad, right? It's very, very clever marketing that I guess all of us are susceptible to. But let us know in the comments, which of these two would you have chosen, Coca-Cola or Pepsi? And I will see you in the next video.